Okay, let's talk telecom. It's earnings season, so we've been watching the profit picture on both sides of the border. In the United States, Verizon, one of the biggest companies around, came out with its quarterly results. Stock has been higher after those numbers. We want to welcome Sam McHugh to the program. He's head of telecom equity research at BNP Paribas Exane. Thank you very much for being with us on a busy day. The market seems to be responding well to the Verizon story. What was your reaction?
Yeah, morning. Yeah, definitely positive as well. I think there's three clear things that people were worried about today, or are taking as positives at least. First is there's been a big focus on their consumer wireless business, where they've been losing a lot of customers to competitors. That number came in kind of 30 or 40,000 better than expected this morning. There'd been a lot of people very worried that they would miss there, and then they would remove some guidance. So they've said before they would be better than last year on consumer nets. So there's a lot of hedge fund negativity around that specifically. I think the fact they beat on that number, has assuaged quite a few of those fears. So that would be number one. Secondly, despite the beat on the phone nets, they came in and had EBITDA ahead of expectations as well, roughly 1% ahead. So profitability hasn't been impacted by the slightly better consumer growth. And then the last thing is guidance. So the companies raised the guidance pretty much across the board. The biggest one is on the free cash flow side. Here, they've benefited to the tune of close to $2 billion from tax reform. So you probably followed the one big, beautiful bill. About $2 billion of savings have come through on free cash flow. So they've taken up numbers roughly about 10% ahead of consensus expectations. So I think you're just seeing really supportive numbers overall. And then definitely that upside to consensus free cash flow has really kind of left people feeling pretty good about the numbers for the rest of this year.
Interesting. That's really helpful. And I guess if people are trying to get a sense of where Verizon fits into the sector story in the United States right now, just as an example, when I look at kind of the analyst consensus on Verizon, it's generally less bullish, if you will, than, say, for an AT&T or a T-Mobile. So when you look at the landscape right now, how would you describe it?
Yeah, I mean, I think there's a huge shift towards convergence here in America. And so by that, we mean selling of wireless plans together with home internet. And I'd say Verizon is still finding their feet. So AT&T has a really clear, we're going to build lots of fiber. We're a market leader in fiber and convergence. Verizon is lagging a little bit behind them, and so they're in the middle of a big acquisition of a company called Frontier. So I think part of the ratings on Verizon is just an element of uncertainty. Excuse me, lost my microphone 1 second. Yeah, an element of uncertainty around the pace of their fiber build. And so investors are a tiny bit nervous as you look into next year, they'll have to raise CapEx again to up the rate at which they're building fiber. And so it really is a narrative story thing where AT&T has a really clear story. Verizon is probably 1 or 2 years behind them, part one. And then look, T-Mobile has been a darling of the sector for many years now. And they've traditionally enjoyed much higher levels of growth. And I think investors have always, struggle to want to own telcos given the mix between growth and value. And T-Mobile has always been a clear growth story, and Verizon doesn't have that same edge. So I think there are reasons why people are more optimistic on the others. I think if you look out 3 or 4 years, Verizon is certainly trying to build a similar narrative now to AT&T, and it's certainly one that has resonated. And so our hope is that once you get through this Frontier transaction, they can really set up a different multi-year investment story again that can maybe get people a bit more involved again.
Really helpful. So, Sam, I guess if we're trying to figure out how a business like Verizon fits into the broader market story, like this year, obviously, there's been recently a lot of excitement for big growth companies. Telecoms, just in part given the nature of how big they are, they're not going to see the same kind of growth that some Silicon Valley company has, but they are pretty steady when it comes to generating lots of cash and doing shareholder-friendly things like dividends. And I would assume if this excitement in the stock market were to cool down, all of a sudden investors might all of a sudden be looking closer at telecom-related stocks. So how would you describe sort of the nature of this business when it comes to the kinds of questions you get from clients, investors with respect to Verizon?
Yeah, it's a great question. I mean, look, certainly these businesses won't deliver the same growth rates as your large cap tech stocks, unfortunately. Look, I think I've always said there's a place for telcos in all portfolios. And I think this was illustrated really clearly during a lot of the tariff noise earlier this year. So the telcos, performed incredibly strongly. Valuations are pretty undemanding. The discount versus the wider market has probably never been wider on key kind of valuation metrics. So they're great companies to own if you're worried about the wider market, worried about the stock market. The subscription nature of the business means they're super sticky. Most people are not going to forgo their wireless services. So there's less churn risk from a macroeconomic perspective. So I'd say they're real steady Eddie companies. Not going to set the world alight in any given year, but they are definitely good yielding, good cash returning stocks. And so yeah, good hedge on kind of market risk for sure. I've spent my life covering them, and I always say, look, if you can find great companies in other sectors that will grow double digits, then maybe you're better off allocating capital to there. But they're definitely that great hedge against the market uncertainty.